1,000 years ago, this was Europe's banking system. Two parties would come together to lend. Each party, the details of the debt would be marked, etched into a stick. And the stick would be split in two. Each party, the borrower and the lender, would keep one copy. This was the first distributed ledger. And this is a tally stick. Now, why was this important? Why was this useful? It gave us three things. One is transparency. Everybody could see the details of the debt. Two, it gave us immutability. So nobody could change anything, because when they came back together, they could see they wouldn't match. And three, it gave us accountability, because it could be used to execute. Now, the King of England actually burnt all the tally sticks, and now we have a modern banking system. And that banking system has actually lost some of those very useful properties that were there in the tally stick. Now, why is that a problem? I'd like to tell you a true story. I've got a very good friend called Ron. Ron's not very photogenic, so this is not a picture of him. But Ron started his own business. About 10 years ago, he started a recruitment business, and he's been very successful. So he's got a very good SME business running, and he works very hard. He hardly ever sees his family, and he puts his life into that business. Ron would do anything to make that business grow. And cash could help him grow that business. Banks want to lend. Businesses like Ron's want to borrow so they can grow. A bank came knocking on Ron's door, offering him invoice financing. And what did Ron do? He said no. I said to him, Ron, what's going on? I know Ron very well. If he has any chance to grow the business, he works all night. He went on holiday recently to Hawaii, and his family was sleeping. He was working all night with his clients. If he can do anything to grow that business, he'll do it. So why did he say no to the bank? There had to be a very good reason. So this is the proposition from the bank. First of all, there's an expensive upfront due diligence process on his company that he would have to pay for. Second, he would have to keep communicating with the bank. So he'd have to inform the bank of new customers and send them lots of data and information. And he worked out, even as a small business, he'd have to employ an extra person just to keep that relationship with the bank. And thirdly, he'd have to go to all his customers, including some very large companies, and tell them all to pay into a brand new bank account. So we'd have to change their payment, and that's quite risky. So taking all of that into account, Ron didn't take the loan. Now, is Ron alone? Is he the only one? Absolutely not. We discovered that banks are missing out on a 400 billion euro SME lending opportunity. So this is the challenge that we've taken on in Tallysticks. We've created a solution which automates invoicing, invoice financing, and payments. And we've done that by bringing back some of those properties of the ancient tally stick. So we brought back transparency, immutability, and accountability by taking the invoice and creating it on the blockchain.
Ron uses QuickBooks as his accounting software and signed up for the Tallysticks add-on. It was as easy as joining Facebook. Now, when Ron invoices, we capture the important headline information and record that vital data to our blockchain smart contracts. As a result, Ron can now invoice directly from his accounting software, and it automatically shows up in his customer's invoicing systems. With our proprietary validation mechanism, invoices can be processed and validated in minutes and hours instead of days and weeks. This means if Ron wants financing, he can submit his invoices through Tallysticks right into his bank's internal systems for review. Because we have transparency, the bank can quickly assess the risk of both parties using anonymous data without an expensive and lengthy due diligence process. And because we have immutability, the bank also knows that the invoices are always legitimate. In fact, invoices cannot be submitted for financing if they aren't validated, so it doesn't matter if the invoices are from Ron's existing customers or new customers. And Ron doesn't need to hire someone to manage the banking relationship. And finally, Accountability is easier for Ron because Tallysticks automatically routes the payments from the customer to the bank, so he no longer has to inconvenience his customers.
So I should emphasize that the payment element, we're plugging into existing legacy payment systems. So there's no cryptocurrency here and there are no tokens. We're plugging into existing systems. The other thing to say is that the bank, when these invoices come into the bank, they're coming in one at a time, or the bank can see them at an individual level and can also assess the risk at an individual level. So instead of relying on that due diligence on Ron's company, the bank can immediately, on an invoice-by-invoice level basis, see through to the debtor, which is really where the risk lies, and look at the debtor's payment behavior and make an assessment level on that basis. So rather than deciding whether to take on a company for lending or not, you can break it down into who their customers are and finance them for the customers that the bank is actually interested in, and even price them differently depending on the customer. The system's live. We have a customer which is a supplier, and the invoice you're looking at here is a live invoice from a manufacturer. We've got hundreds of invoices going to the system as I speak. This is an invoice that's captured as a smart contract on the blockchain, and it was captured directly from the company's accounting software. And this is that same invoice as it appears in the SAP system of a customer. So we've got a fairly sophisticated solution. We had to come up with a very simple pricing model. So we take transaction fees. And we didn't stop there. Looking ahead, we're looking at securitizing the invoice. Because we've captured the invoice, it's signed by the parties, and it's in a shared ledger, we want to give the bank the ability to turn around and take that invoice that they financed and sell it on in the secondary market.
Thank you. I gotta stop the party here and hand over to our judges. I gotta say, it's not every day I hear the word blockchain and as easy as joining Facebook put in the same sentence. So I believe there will be a lot of questions from our panel of judges. So I'll just leave the microphone here.
How and who validates the invoices? Can you explain that mechanism, that consensus mechanism?
Yes. So there's validation by the buyer, so the customer, which receives the invoice. So it depends on their systems and how they're receiving it. So the most basic level, they can receive the invoice through our UI as an email with a link, and then there's an option for them to approve the invoice if they don't want to pay it immediately. If they want to pay it, then they'll pay through us. If they approve it, then that approval is in our system. The supplier can see it, and then they can offer the invoice to the bank. So it's then been signed and approved by both sides. If it's a corporate and they're using something like SAP, then there's typically an automated and manual process around the validation. So we capture the PO. The invoice is already linked to the PO. We check that the supplier is working within the budget of the PO, and then so we're plugged into the SAP. So all the validation that normally happens as a manual validation goes away. So the invoice is approved very quickly. And then once it's validated, we get that from SAP, we put it back onto our smart contract, and the bank sees it. And the supplier sees it, so they can offer it to the bank. So it's all very quick. It can happen much quicker than it happens today. We spoke to large corporates, and some of them will take a week just to validate a PDF invoice, check all the fields are correct, see that it's been scanned correctly, check the bank accounts. All of that disappears because we're linking those siloed databases through one system.
What blockchain technology, what's the underlying blockchain that you're using, and how does this problem with scalability get addressed going forward?
So we've started using the Ethereum source code, not the Ethereum network, but the Ethereum code for our own private blockchain network. The reason we selected Ethereum is because it has such a rich smart contract language. It has the most mature, we think. We're in the process so we're very much plugged into the ecosystem, including Bruce and Ascribe. So we're looking now at and actively testing with variations of Ethereum. Our application is built on those smart contracts. So as long as we can take those smart contracts and put them onto whatever turns out to be the most scalable platform, then we're fine.
So you got one customer signed up. That's what you told, huh?
We've got it's a beta testing customer. Yes.
Yeah.
Yes.
So what's your go-to-market strategy?
It's actually partnering with banks. So we're in the Barclays Techstars Accelerator, so we actually sit next to Leanne. And we're working with Barclays, who incidentally used Tallysticks when they were founded in 1690, and now they're working with us to look at the invoice financing, improving and optimizing that process. So there's Barclays, and we're working with a number of other banks as well in a similar way. The way we see this is that if it's better for the banks because they can get to go deeper into the market, and especially the SME market, then they could push this out onto their customers to make it easier for them.
I can just ask you directly. From integrating into the bank's workflow from an invoicing perspective, I mean, how differentiated is that between each of the banks? And obviously, you're working closely with Barclays, but what is the go-to-market strategy and how
right.
associated with that?
So first of all, what we found, and this isn't necessarily Barclays, but we found that the process is it's very much it's paper and PDF driven, right? Because that's what they're all plugging into today. So there's a gap there to automate this in any case. If you're going to automate it, you might as well do it in a way, with immutability and these other properties. So that's kind of what we're working with. We're working more with the people, and most of the work there at the moment is admin, and it's admin around tying these things together, which would otherwise, which wouldn't be necessary. So we can basically automate a lot of what they're doing today, a lot of the errors that come up today, and dealing with those errors, that can be managed as well, and that can be reduced.
And who are you selling to in the bank when you go and sit down at the bank? Who's the person that you talk to?
Yeah, there's usually invoice financing. Sorry? Oh, microphone?
Yeah, I think we have to move forward to not run out of time. I believe that the companies can answer a lot of the questions later on. But thank you, Ari, for a great presentation.
Okay.